Hello everybody, this is Lara with your weekly video for US oil for the week ending Friday 26th of August 2022, and I'm recording this video after New York is closed, so I have final volume data. This week, after some difficulty in reanalyzing the second alternate Elliott Wave count, or the third Elliott Wave count, all three Elliott Wave counts expect upward movement next week. At least 109.10 is the expectation, and there is some support for these bullish wave counts. Elliott Wave first, classic analysis last. At the monthly chart level, this is still the wave count. For a long time I've expected that Super Cycle 2 ended down here as a double zigzag. It has a really good fit. W, X, Y. The first zigzag, A, B, C. The first and second zigzags joined by a 3 in the opposite direction labelled X. And the second zigzag, A, B, C, has a really good fit. It's ended quite strongly. C waves, they're in a third position, and so they can behave like third waves, and this one did. There's a beautiful V bottom here, and I expect that this low at 10.24 will be sustained. The new upward trend I am labelling Super Cycle Wave 3. It may only subdivide as an impulse, and so within it, Cycle 1 must subdivide as a 5-wave motive structure. This is very obviously not a diagonal, this is an impulse. And when Cycle 1 is over, this wave count will then expect a bear market for Cycle 2 to last 1 to several years, and it may find final support at the upper edge of this channel, and this channel is the reason why I publish this monthly chart every week. This channel should provide support. It has some reasonable technical significance. It provided resistance here, price came up to find resistance here, moved down and away, broke through, a back test of support, moved just a bit below the channel, a bounce up, another back test of support, perfectly fine support at that trend line, and now it's moving up and away. And so when Cycle 2 arrives, this trend line has some reasonable significance. It may provide support. Let's take a look at the first of 3 charts for the weekly chart, this low here. The start of Cycle 1 is this point here, Cycle Wave 1, subdividing as an impulse. It cannot be a diagonal, there's just not enough overlapping. As an impulse, this works with a short Wave 1, zigzag for Wave 2, extended Wave 3, double zigzag for Wave 4, so there's some alternation, and an extending Wave 5 with intermediate 1, 2, 3, 4, and now moving higher for intermediate 5. The target is for primary 5 to reach 1.618, the length of primary 3 at 132, and that would see intermediate 5 move beyond the end of 3 and avoid a truncation. If intermediate 4 continues any further, it may not move into Wave 1 price territory below 85.41. There is some disproportion now between this double zigzag of intermediate 4 and there's a single zigzag here of intermediate 2, but this disproportion is not as bad as the other weekly chart for the alternates, and so this wave count does still have a higher probability. Let's take a look at the first daily chart where the end of intermediate 3 up here is this point up here. Intermediate 4 subdivides as a double zigzag, ABC. The first zigzag in the double is labelled minor wave W. The double is joined by a 3 in the opposite direction labelled X, subdividing as a zigzag, A, B, C. C is an ending contracting diagonal. When X ends, Y begins. Y subdivides quite nicely as a zigzag, A, B, C, and C an ending contracting diagonal. If intermediate 4 is over here, then intermediate 5 should have begun, and it may have begun this week with a couple of little overlapping first and second waves. If my labelling of this is wrong, it may be 1 degree too high. I may need to move it down 1 degree. Minor wave 1 only may be beginning with minute 1 and minuet 1 too. But I'll leave it as it is here for now, and in coming weeks I may have to change the degree of labelling. The target will remain the same for now. When minor 3 and 4 are complete, then I can add to the target calculation at minor degree. At that stage it may widen to a zone or it may change. At the weekly chart level, this is the alternate. It's possible that Cycle 1 was over here with primary 1, 2, extended 3, 4, and a not extended 5th wave, so only the 3rd wave within Cycle Wave 1 may have been extended. But the problem here is proportion between intermediate 4 and 2. Intermediate 2 over in just a week, intermediate 4 lasting several weeks. This doesn't fit very well as an impulse, but this is the best solution I can find if we try and see Cycle Wave 1 over here. and it's important to always consider alternates. If cycle 1 is over here, cycle 2 may have begun and may be unfolding as a flat correction. WXY, the first structure in the flat, may be a double zigzag for primary A. Within a flat correction, wave A must subdivide as a 3, a corrective structure, and a double zigzag is a corrective structure. The only structure wave A may not subdivide as in its entirety is a triangle for a flat. When A subdivides as a 3, it indicates a flat, and then B must move higher, and then C should move below the end of A to avoid a truncation. Cycle 2 may not move beyond the start of 1 below 10.24. Let's take a look at this at the daily chart level. This high here is this point here. Double zigzag WXY is labelled in exactly the same way as the first daily chart, but here I'm considering that double zigzag could be wave A of a flat correction for cycle 2. We can't consider cycle 2 if this is a double zigzag. Cycle 2 can't be unfolding as a combination because you can't relabel a double zigzag primary wave W. W, Y, and Z waves do not themselves subdivide as multiples because the maximum number of corrections in a multiple is 3. To label multiples within multiples increases that maximum beyond 3 and violates the rule. It is the most misunderstood and ignored Elliott Wave rule, and one of my little tricks for identifying online when I come across anything calling itself Elliott Wave. Is it any good? Look for W, X, Y, Z within W, Y or Z. If you see that, move on. It's got no predictive value whatsoever because it ignores Elliott Wave rules. And so if A is a double zigzag, then 2 could be a flat correction. Within a flat, B must retrace a minimum 90% the length of A at 125.07. The common range for wave B within a flat is from 1 to 1.38 times the length of A, giving us, for this example, a normal range from 129.44 to 146.05. B can move beyond the start of A as in an expanded flat. When B is a complete corrective structure, and it may subdivide as any Elliott Wave corrective structure, including a triangle, so long as it meets this minimum at its end. When B is complete, then C should unfold and should make a new low below the end of A to avoid a truncation. At the daily chart level, at the weekly chart level, this alternate's the same as the alternate weekly chart up to the end of cycle 1, so it has that problem of poor proportion within primary 3, so that reduces its probability. And now I'm considering, what if cycle 2 is not a flat? What if it's going to subdivide as a zigzag and be a lot deeper? It would probably be a lot deeper. Second waves, the corrections are normally very deep, and a cycle degree second wave should last from 1 to several years. And a zigzag is the most common structure for a second wave to subdivide as. So what would that look like? Primary A would have to subdivide as a 5-wave structure, most likely an impulse. Intermediate 1 and 2 could be complete. Intermediate 2 here labelled as a flat correction, A, B, C, with C an ending contracting diagonal. Intermediate 3 may only subdivide as an impulse. Within that, minor 1 could have been over at the last low as a leading contracting diagonal. Within a leading diagonal, waves 1, 3 and 5 most commonly subdivide as zigzags. They may also sometimes appear to be impulses. And so we can see minute wave 1 as a zigzag, A, B, C, with minuet A a leading expanding diagonal. This is okay, but it doesn't quite have a really good look, this part of the wave count. That slightly reduces the probability a bit further. Following leading diagonals in first wave positions, the second wave correction after them is commonly really deep, so a minimum expectation for this wave count would be for minor 2 to reach up to the 0.618 Fibonacci ratio of minor 1 at 109.18. Minor 2 may not move beyond the start of 1 above 123.68. Classic analysis now. So all 3 Elliott wave counts this week are expecting upward movement. Is that supported from classic analysis? At this low here, the last week completed a hammer candlestick pattern, that's a bullish reversal pattern, and this week completes an upward week with a higher high and a higher low, and there is some support from volume. On balance, volume has moved up from support, so this all looks a little bit bullish, at least a little bit. Let's expect support at 85 to probably hold, and support at 93, it's weakened, it may or may not hold. But support at 85 below is now fairly strong. ADX is declining. There's no clear trend at this time frame. RSI, money flow index, both neutral, stochastics oversold. So with no clear trend, stochastics oversold, and price moving up from support, expect an upward swing to resistance, which may be about 123. ATR declining, or is overall flat as price moves sideways. At the daily chart level, there's another hammer candlestick pattern here close to the low. No bullish reversal pattern right at the low. There is now some push from volume this week, pushing price higher, so that supports a bullish outlook. On balance, volume gives no signal. This resistance line has some technical significance. If we see a break above this line, that would be a reasonable bullish signal. The previous downward trend reached extreme, but not very extreme. RSI didn't reach oversold, but money flow index did, and there exhibited bullish divergence. And so with that downward trend possibly now being over, according to ADX, it is possible that support about 85 could hold, and we could be on a new upward trend within a larger consolidation. RSI, money flow index, both neutral this week, as is stochastics back in neutral territory, and ATR overall declining as price moves lower and now a bit higher. There is still some weakness in that movement. That's it from me this week with your oil analysis. I hope all our members are looking forward to a fabulous weekend.